Markets are beginning to adjust to a world with less geopolitical risk in the Middle East. The apparent peace agreement between the US and Iran has eased concerns around shipping and fertilizer supply chains, contributing to weaker urea prices as the market recalibrates expectations for global fertilizer supply and pricing. Meanwhile, potash affordability remains a challenge as crop prices continue to fall and global buyers are reassessing their purchasing strategies. I'm Johanna Bota, and joining me now to discuss the latest developments is Josh Linville, VP of Fertilizer at StoneX. Josh, great to have you with us as always.
I appreciate it. We've got finally something fun to talk about, something positive to talk about.
Well, the verdict is still out. It seems that the US and Iran have finally come to a peace agreement, although nothing has been signed yet. What has been the biggest change you've observed so far, and where has the reaction been most pronounced?
So it's a nitrogen market. And I think if you really need to scale the whole thing down to one single point, and this is the thing we've continued to talk about, I'm not worried about what the US says. I'm not worried about what Iran says. I'm not worried about what the rest of the world says. We're worried about vessel traffic.
Yeah.
That's the thing that really, when you strip away everything else in the story, are the boats moving or not? And by all accounts today, it looks like they are. And so we're finally seeing all this weakness on global urea values. Middle East values have started to fall. Chinese exports look like they're starting to return, which is kind of a symptom of them believing the world is improving. They don't have to keep that stuff at home.
Yeah.
A great example of how much it's fallen, NOLA urea, New Orleans, Louisiana. So we're talking about North American marketplace. At its highest trade, $780 a ton, short ton USD, of course,
Yeah.
do your conversion. As of this morning, this is different than the notes I had written to you earlier. We've actually traded down now to $350 a ton.
Wow.
This is the lowest price that we have seen since January 2025, not 26. This is over a year and a half since we've seen this type of level.
Yeah.
So we're finally seeing all of this weakness in the nitrogen market because the market's looking at it and saying, China's coming back. We've got the Strait of Hormuz reopening this ship traffic. Everything is getting back to normal, and it's happening at a perfect time of year. Again, we're moving into the Northern Hemisphere summer months, which is a very slow demand period. This is when we usually hit our seasonal lows. So we've got all these tons coming back. We've got all these ships that were already loaded with urea coming to the world. We've got all the tons in the warehouses going to start getting loaded and headed out to the world. And everybody who's a buyer is saying, I'm not interested. So the unfortunate part of it is the grain prices aren't exactly doing anything to make it look great.
Yep.
So it's kind of it looks good versus historical urea pricing, but it doesn't look so good when you look at it versus grains. But that is what it is.
So, for growers watching this, should they view the recent pullback in urea as an isolated move, or do you think that we could eventually see a broader correction across the fertilizer complex? What about phosphate, for example?
Yeah. So I think we're going to see a pullback on phosphate. And the reason I say that, until Saturday or until this last weekend when it sounded like peace was finally getting agreed upon, ships
Yeah.
were starting to move. World manufacturers of phosphate were not able to get sulfur. Is incredibly high price because so much of it comes from the strait. And hydrous prices were incredibly high because so much of it comes from the strait. Even
Yeah.
Saudi Arabia finished phosphate goods couldn't export at normal levels. So now you open a strait, sulfur can flow and hydrous can flow. Phosphate finished goods can flow. All of those are very, very bearish events for each one of those individual markets. That should lower the price floor for global manufacturers. And before, with the price so high, if we had cut the price of phosphate around the world, you would have cut more production. And that would have rebalanced the S&D at a higher number, and it would have been a net loss for the buyer.
Yeah.
Well, now with these values starting to hopefully come off, I'm hoping we'll start to see more and more bearishness in the phosphate market because as of right now, again, I always look at corn. But when you look at the phosphate price today versus the corn price today, nearly the worst ratio that we have ever seen. I mean, we are challenging the 2008 highs once again.
Well, let's actually stay with that idea because I want to move on to potash. And I want to look at this from the grower's perspective. We've seen that potash summer fill program priced, and the participation appears to have been fairly solid. But when you compare fertilizer costs to crop values, the picture looks very different. Can you walk us through that once again?
Yeah, and this is why we look at this ratio approach so much more than others do out there because we understand when it really comes down to it, that farmer is much more like a manufacturer. They have to worry about not only the inputs, but the outputs. And no manufacturer out there is trying to call it the low of the input and the high of the output. They're looking for that relationship that's very low.
Right.
And when you look at where the potash values are, they are well priced. Do not get me wrong. I am not sitting here saying that the potash manufacturer is getting rich and they're hosing everybody. It's actually a very solid value that when you look at it versus historical values, it makes a lot of sense. When you look at the cost to move goods around the world with logistical cost up like they are, it's a very solid value.
Yeah. So it's a crop
And
values.
even if you were but it's a crop value, and that's a problem. We have seen new crop corn here in the US hit as high as $5 per bushel.
Hmm.
Today, it's sub 450. So when you look at that 450 corn price, the farmer's going to have to, sell their crop and that's what they're going to get back. And you look at the potash price, all of a sudden, that value is one of the worst that we have seen in recent history. Now, it doesn't get nearly as high as what we saw in 2021 and 22 when we thought we were losing Russian exports.
Hmm.
But it's an incredibly high value. And that's why we look at that relationship. If you just looked at potash on its own, you'd say that's a really good price. And a lot of people bought into the summer fill as we thought that they should. That's what we were kind of talking about advising, take a good
Yeah.
layer. But when you look at it versus grain prices today, it is on the higher side. It's something I think is going to have a few people kind of pause and look at it and say, is this really what I want to do this coming season?
Yeah. Now, beyond geopolitical developments, one of the more interesting stories that we've been following, and we've talked about it in the last few episodes, is India's urea buying program. Now, just a few weeks ago, there were questions about whether India would be able to secure enough supply. I think they wanted about 1.7 million tons. Now, fast forward to today, and they've actually exceeded their original purchase target. I think they got 1.8, correct me if I'm wrong. What does that tell us about the current state of the global urea market?
I think it tells us there's product out there, and there are willing sellers out there. This price was fairly aggressive, and I think it kind of maybe it took a few people off guard just how aggressive the price was. And something we've been talking about for the last 16 weeks is product tightness, product lack of availability. Well, and all of a sudden, when India put out the tender and they got their offers, they got almost a little bit over 6 million tons offered to them. Now, I think there are some offers that were shorting the market. I think that there were some folks who maybe they double, triple counted the tons that were out there, but it gave you a sense of how comfortable the market was with the inventories that were out there during
Mm.
this time of year. Um, During the first round, they only secured 1 million tons
Yeah.
and they went and countered everybody and they were slowly building it. But as we see this peace deal between the US and Iran continuing to hold and ships starting to move, that gave the market more sense of like, I better sell this because I may not have a better opportunity. The fact that China continues to look like they're going to come back to exporting gives them the sense of I better be selling this because I don't know if I'll have a better opportunity. So we're seeing all these bearish factors starting to pop up. And I think the market just finally said, heck with it. We've got to sell these guys. We've got to get these tons locked in to Indian farmer benefits. This is going to be great for their supplies.
Hmm.
Now we're going to start to watch their monsoon season and try and figure out how good that's going to be. There's some reports that might be a little bit subnormal, maybe 90% of normal. That might have some impact on their fertilizer demand.
Yeah.
But we've seen that change in the past, right? So it's a great thing for India. I think to me, it proves that the market's saying, yeah, short-term outlook is probably kind of flat to boring to maybe soft.
Josh, thank you again for joining us and for keeping us informed. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.